Hey guys, Doug the Retirement Guy here. We got another update on the Ymax Universal Fund Option Income ETFs from Ymax. This is a very popular one that's been on the channel. I know a lot of you have money invested into this one, and we just want to keep an eye on it for everybody to say, hey, what's going on with it, where we're at. Personally, I'm invested into it as well, so we're going to cover this today, see what the fund's doing and where it's heading. Before we get into that, I want to say thanks to each and every one of you who've hit that subscribe button, especially everyone who has joined us on Patreon. Uh, really appreciate it. You guys are what keeps this account running and keeps this thing going forward. So if you can want to support the channel, go down in the description and hit that button that says Patreon, the Retirement Guy, and get you taken care of. Let's get into today's video about Ymax. Now, the first thing we see here is Ymax dividend yield is down to 50.43%. That's what Ymax or Yieldmax advertises. We've seen this thing up to 80%. We've seen it at 70s. Now we're into the 50s. So this is why we're serious. We need to review this and see what's going on. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. It should only be considered financial or investment advice. The example and suggestions discussed are illustrations and may not be suitable for all individual situations. Always consult a licensed financial advisor or professional before making any financial decision. So guys, Yieldmax is a universal, we call it the fund of all funds. So what they did, Yieldmax made this fund is they took all of their ETFs that they have established, they put them all into one big package, and then they try to work off of that exposure to gain increased performance of the fund. It's a very interesting piece. We think Roundhill's going to come up with one because this has been actually a very, very strong program. The distribution rate, as I've said earlier, has been all over the place. It's now at 50.43% because we're starting to see the value of the stock climbing, which is a big positive for a lot of people. The 30-day SEC yield is at 88.53, which really means that this thing is just cranking some heavy cash coming out of it. And the expense ratio is at 0.99. It's been right along with Yieldmax as a program. When we take a look at what they do in holdings, you will see these are all Yieldmax option income strategies. Everything that they have under their hood, they put into this program. Even the new ones that you see is the Yieldmax Hood, the Robinhood program. They've already had that added into it. And they do a very, very balanced fund across the board. So they're not cherry picking one over the other. They're getting the best of all of them across the board. So why Ymax? Well, we always say the same thing here is it's because they're advertising at 50% return. Everybody wants the big, big dividend payouts. And this one does it, but the question is it safe? We've always heard over time, oh, Yieldmax, it's a NAV erosion. You're losing your money. You're just getting your money back. But I really believe that we're going to show something here that's going to tell you that no, that's false if you play the game right. And Yieldmax with 50%, definitely a solid player. The exposure, it amplifies the returns of all Yieldmax's funds. That is huge. It also gives you a powerful combination of potential powerful growth and weekly income. And that's right, this one pays, it's one of the weekly dividend payouts. It was a monthly, switched over to weekly, and it made a huge difference. So in this program, we're going to show you both of these options, but you can reinvest your weekly payouts, or you can take the cash off the table and just put it in your pocket. Now, the number one thing that I think why you want to be a part of this, it's the funds of funds. And what I mean by that is you're taking Ymax and you're investing across the entire platform of Yieldmax ETFs. So you can do this in a very controlled, very inexpensive way. I believe the shares last time I looked were like $13.90. But you basically get a portion of every fund that Yieldmax makes. So if you see one that takes off, you're going to get some benefit because you own Ymax. If you're going to see one that's takes a dip, you're going to take a minor little dip out of it. That's one of the big reasons why I say Yieldmax is the Ymax is the place to be. Let's take a look at Ymax over 1 year. And this is where everyone starts, and we'll get hammered galore. I know with the comments, and people will say, oh, Ymax, that's just put your money in and don't get anything back. Well, when you look at this, and we'll go at the very bottom, the stock market 1 year out, it's down 30.89%. The year to date is at 18, down 18%. 6 months, it's down 16%. But look at the 1 month. 1 month, it's already up 3.18%. If you take a look at the funds as we see, this thing started off a year ago, we were at the mid 20, and then it started to take massive drops, and then it held, and it really held all the way until the March Madness, and then really got clobbered in the April tariff program, which there's not one stock out there that I found yet that has not been hammered with the tariff program, because we didn't know what was going on. We didn't know where the tariffs were going to settle. How is it going to affect the U.S.? How is it going to affect the markets? And so here's where we're at. After the April 2nd, this thing is slowly it's finding its groove. It's finding its way. It's getting back to where it was. And you can see right now, when I filmed this, is $13.96 already. So this thing is climbing, and it's slowly making its stab forward. This is why Ymax, everyone who comes back and says 30% drop, no way. But when you start looking at what this fund is doing, if you're buying today, if you bought in the past 30 days, you're actually the guy saying we have a 3% gain. We don't have any NAV. We don't have any loss. We have a 3% gain. So this is why we do this. Then I take a look deeper into we take a look at the 30 days breakdown. And when you see this, it started off about $13.50. Now, when you follow that green line, you'll see that it started to come down and then went back up and then right back down. And 1340 is basically the rock bottom that this thing has really seen over the past 30 days. But then it started rocketing. It started taking off. I call it finding its legs. And it's going up, and then it resets and then goes back up. Resets, goes back up, to where we had the biggest drop off that we had. And when we're talking big drop offs, we're basically talking about a 10-cent drop off. And now it's finding its legs again. And it's tests each market, each plateau it tests, can it hold? And then it goes up to the next market and holds. When you look at the 1 day, which anything you could take a look at 1 day will be up or down. It's that sensitive, but it's up 0.5% in 1 day. 5 days up 1.27, so that's getting a week worth of gains. And 30 days, you're seeing a 3.07, so it's basically finding itself, holding its own in the 30-day mark. Now, when we did this, and you see the screen at 1396, that number right there, what does it tell you? It says the 30-day average is 1363. That is growing from the 90-day point. Okay, 90 days out, it's only $13.49. That means over the past 30 days, we're actually gaining ground and the average is going up. So normally what you want to do is you want to look at what's the 90-day mark. Are we going to get to the 90-day package at 1349? Well, we've blown through that. Now we take a look at the 120. The question is, will this stock get to the 1419 of 120 day average day? And I've looked at 1396, getting to 1419 is very, very simple and very easy to do. Now the question comes in, can it hold? And that's where we go back to the 30 days. It's holding at that 1363 mark. So it's really holding at a higher level than it did in 90 days ago, and it's holding higher in 30 days down the road. So it's very strong that this is a fund that's already starting to grow and starting to take off. And the train is leaving the station. We take a look at the dividends. How are the dividends paying out of this thing? And this is where it's the exciting part, and I think where a lot of people are starting to figure this out and buy into this, is look at the average dividend is 15 cents per share per week. Now, when we looked at this thing here, back in October 24 is when it made the big switch from monthlies to weeklies. And it had to find its path, and now look at what it's done since April. It is probably one of the simplest and easiest one to staying level in a option called strategy. And what that means is options, they're selling calls on these things, making money from generating from it. We put in the past six dividends that it's paid out, and July 10th was actually the lowest that it's paid. Everything else has been in that 18, 17, 15, 16. That's where we get that 15-cent average across the board on Ymax. And it's pretty much been steady across the board for almost 4 straight months on this. So very solid, very strong dividend package across the board. So what we did was we put this in the computer calculator. On this particular one, I'm going to tell you, we did not buy into this at this time. I'll show you when we did. But if we took $10,000, invested this a year ago in July, the stock was at $20.20. We would have bought 495 shares. We would be crying in our milk, like a lot of people have done, is that we lost 31.34%, or $3,100 of our initial stock value. Now, over the past year, the fund has paid 42% dividend, or we would have collected $4,220 from our $10,000 investment. Now, that's big thumbs up. That's strong, 42%. Very proud of that. It shows that it's been paying it for 1 year already. So what's going to change? But with that, our total stock return of 12 months would have been 10.87%. So it's a good number, but it's not a great number, because you think you're trying to get 42 and you're covering your losses on your stock return. And it's been like, it's okay, but is this where I want to be? Let's take a look now, as a lot of people have suggested. What if you took and dripped or rolled your investment back into this? And since there are so many funds out there, we basically did it this way. Is a year ago it was $20.20. On 7/8/7/14 it was $13.87. What we did, the computer calculated it all out every month, every week, then bought more and more shares. So we would have ended up with 821 shares. So almost doubled our quantity of shares in that short period, in that 1 year period. We would have ended up with a total stock return of $1,398, or 13.99%, versus the 10.87%. So definitely doing the dripping and reinvesting your dividends makes a huge difference of about a 3.01% gain. Or you would have gained $312. Now, if you're preparing for retirement, perfect way to do this. If you're looking for long-term investment, great way of doing this. If you're someone like me that needs the money to retire from, I need my dividends to pay the bills and so on, that's why we always show it at the bottom. But this way we can show you both versions now. Is a 3% gain if you can take your time and wait, or go from there. Now let me show you here. This is the one that we have invested in. This is our hardcore facts numbers of what we did. On April 25th, we chose, let's get into Ymax. We put $10,000 into this and bought it at $13.21. Our computers, everything that we did said it was time to buy, and we pulled the trigger and we did it. We bought 757 shares. We show everything through here with the dividends. Now this is, got to remember, this is only about 3 months of information as we go through this. And when I say 3 months, we've only owned it for 3 months. This is where I continue to tell people is you got to understand the stock. You got to understand the buy points. You got to understand when to get in, when to get out, and understand where we're sitting at. And I believe we did this back on a couple different videos that we said, hey, look, here's the price point to look at. Here's where you want to be. And 1321 was a great number to be at for buying the 757. So when we go all the way out to now, 714 was the last information I had before making this video. The stock price was $13.87. Now we know that's even up from just the information I was able to pull, but we at $13.87 is our stock price. So we have made $500 on this investment in just over 30 days, or 5%. Now you tack in our dividends that we've added into it over the past 3 months. We've added $1,420 already, or 14.20%. So the dividends are definitely holding up in 3 months. The simplest thing you can do is take that 1420 and times that by basically 4, and that will give you really what you're looking at for the whole year, which puts us about 60%. So very, very strong dividends, higher than what they're posting, but really going to be in that mid 40 range, I believe, as we had last year. And then we take the stock return right now, add those two together, and we're getting a 19.20 total return on our investment. So very, very strong numbers as we talk when buying at the proper time. So the question is Ymax a good time to buy? And I think the train's almost leaving that station, and I'll explain to you why. We talked earlier about if this thing is at 1390, the current price, as we say, is 1387, but we're looking and trying to get to that 120-day average, which is about 40 cents gain in that stock. So as long as this thing continues to show legs of climbing, we believe it is a good time to buy. We believe that this thing is, you're going to see the what you see on the screen. You're going to see this thing get to a point and it's going to drop off again. And that's when I would buy the dips. I would buy and add in on the dips. How big of a dips it can be, we don't know. We're seeing stuff now that we're seeing about a 10 to 15 cent dip drop. So if you hold off and wait right now, if this thing's at 1387 and we get a 10-cent drop, we're down to 1377, probably a good time to buy. Now, here's one thing I will tell you too. Always buy this off dividend. And what I mean by that is when you have the X date, it tells you that the X date's when they're going to classify. Everything gets sold after that without a dividend. You're going to find that if you buy it properly, you're going to find that about the 10 to 12, 14 cent drop off, depending on what the dividend was. If you can buy at those points, you're actually buying ahead of the game. And now I know people are going to say, well, you're just not getting the dividend. Correct. But this thing is recovering so fast that you're going to pick that dividend back up in value because it recovers so quickly. And that's how I suggest you buy them on Fridays at, when the dividend part is off. Go ahead and buy this and get invested into it. But we're really targeting trying to get to that 14-19 range right now, and I believe it's going to find its legs and do that probably over the next 14 days. So is Ymax good for a retirement investment account? I always answer this one as a maybe, and here's why I explain it. The estimated dividend total is 42% over 12 months. That looks phenomenal. I would love to have that in the portfolio. But when I look at that over a 12-month period, I have to tell you we've lost 31%, which is way too high of our net value. So we're only gaining a 10% gain. But if you buy now and bought at the proper time, this fund can really work well if you buy accordingly. Now, the other add to it is if you buy now, you need to put an asterisk on it and you need to watch it. And we're watching on a regular basis. So if it's a comfortable thing, watch our channel and you'll be able to know when things are going good or they're going wrong, because we will be reviewing this on a regular basis. And we do this on a regular basis every week on our weekly dividend paying funds. So we're always watching this fund, but this is what you need to do in retirement. You need to keep an eye onto it. If we start to see some big drops off, get out of it, sell out of it, move on. But always remember that past performance doesn't guarantee future results. That's why we watch this and we do so much with this on the video. So guys, I don't want to sound wishy-washy, maybe. The question to everyone's different. If you're a person that loves watching his stocks, probably a great one to be on. If you're one that just wants to set it and forget it and not even worry about it, probably not for you. But that's why we put it out there as a true maybe. Hey guys, this is Doug, the retirement guy. I want to thank each and every one of you. Like what we're doing, give us that thumbs up. Definitely helps. Make sure we know that we're doing the right thing for you. If you're not a member of the community, hit that subscribe button, join us. And if you can support and help the channel, it's real simple. Go down there and click on that Patreon button and walk yourself through it. Also, leave any comments, good, bad, or ugly. We'd love to hear from you. We'll catch you next time.